So, hello and a good afternoon. I welcome you to today's Trading Spotlight webinar here together with Admiral Markets. It's Friday, it's the 5th of February, 2021, and we'll go through a very fascinating topic today, how to trade earnings season. This is what we want to look at. Right now, we are in the height of earnings season, in fact. Just let me check here if everything's fine now. So I had some issues, but this looks good. So 1 second. I'll also, since this event is also streamed live on YouTube, I want to just check here whether there are any questions. So anyone can certainly ask questions right here in the Zoom Spotlight webinar, but you can also ask your questions then in the YouTube event. And let me just 1 second here. Mute me here. Perfect. And so that you see I'm here. Hello, traders. So let's take it from there. So again, we have a very special topic today. We have an event today which is right now very hot earnings season. So we are in midst of earnings season. You probably have heard about the release of earnings over the last days. Amazon delivered some very solid numbers, or we could put it differently. We could say Amazon is eating the world right now. Numbers were just crushing it. The same is true for Google, but especially when it comes to Amazon, numbers were just crazily good. Yesterday, already on Wednesday, eBay delivered numbers also very strong numbers. So to make long thing short, given these strong numbers, certainly it makes sense to give trading earnings season a deeper look, the topic of trading earnings seasons here, and give you an idea on how I attack earnings season. Today, numbers weren't released, or especially not yesterday, from big companies, or at least not companies I consider to be huge or big, being big players like Amazon or Google. But Unity, for example, delivered numbers which were in line, but given the recent developments here over the last months. So the company went public, I think, somewhere last year. And that said, numbers were in line. Market participants pushed the stock higher and higher and higher and higher. And from there, we have now potentially a sell the news event. So the stock is in fact hot compared, or given the so-called checklist I will present to you here. Another company which probably some of you probably have not yet heard of is the ticker symbol is TDC, Teradata. Also delivered, in fact, crushing numbers, so very good numbers. It's a quite small company. Still, some very interesting developments there taking right now place, and so this is just two names I just throw out here instead of going through these two names for today. So Unity, the short is U. So U.US. You can find any details around the stock then and how and where you can trade it via Admiral Markets on the website, respectively under the symbols tab in the MetaTrader 5. And TDC is TDC. So Teradata is TDC in this case. So for further research, you want to probably do. What we will do instead is I will guide you through a real trade I did recently. Also in a major company, a big company, Netflix. Everyone has heard about Netflix. It's also part of the so-called Fangman group here. So Fangman is short for Facebook, Amazon, Netflix, Google, Microsoft, Apple, and at the end is for NVIDIA. So NVIDIA, by the way, I can also tell you this, will also be part of one of the upcoming hot Trading Spotlight webinar series. It's not within this series. It's another series we just recently launched. The next one will be on Wednesday, also with me on central banks. And here we also want to have a deeper look at NVIDIA in this context. But Coming back to Netflix, they also gave a very great numbers, very great earnings report, and pushed to new all-time highs. And I took a trade based on this earnings report. So what I present to you now, what is earnings season, and in terms of the agenda here, so what can we understand when it comes to earnings season, and especially how to trade earnings season, my checklist here. I will go through this and present it to you with a recent taken trade, in this case, in Netflix. So yeah, and that's it around today's topic. So you can already see here, I'm quite excited, to be honest. In terms of my person, you can see here, I had some more hair. I just gave it a try, so took the lockdown as a chance, and my wife gave her okay, and so I just shaved my head. Hope it looks some kind of fine. I don't want to talk too much about my person in this context here. The short version is I started trading as a professional after I finished school / I finished my traineeship within a bank here, and I learned trading from scratch at the big stockbroker. And that was a job I took as a trading assistant beside my studies then in mathematics and economics, and yeah, took it from there then. And rather sooner or later, was hired by a broker where I built the research department, in fact, here for the German-speaking community. And then after 5-6 years, I went out on myself, and today I'm not just trading professionally the market, but also I'm working as a consultant, trading coach, and all this. So built my own little company. And what's probably of higher interest is within this consultancy and sharing my thoughts on the markets, I'm working together with Admiral Markets, a financial service provider for now nearly 20 years within the financial service industry, and a well-known company, especially when it comes to CFD trading within the German trading community, given the fact that the offering from Admiral Markets is highly competitive, especially when it comes to DAX trading. Same is also true. It's a clear classic multi-asset broker. So you can also trade not just CFDs, NFX here, but also, for example, physical stocks, stock CFDs in this context, certainly. And Admiral Markets is recognized as, especially when it comes to DAX trading, as the so-called DAX expert, but has also a very, very competitive offering when it comes to FX trading. So I highly recommend checking out the website, admiralmarkets.com, for further information on their offering. And so now we want to dig into today's topic and want to have a look here at the question on how to trade earnings season, respectively. What is earnings season in this context? By the way, I just saw. Okay, I haven't opened the other tab. So let me just here guide you through this. By the way, let me just check here the chat box. What do we have here? Okay, that's interesting. Okay, that's interesting. So no, I unfortunately, sorry, I don't have it open here. Okay, no problem. So let me guide you here through the first question on what is earnings season. So earnings season is the period of time during which a large number of publicly traded companies release their quarterly earnings reports. And as I already pointed out, Google, Amazon, Microsoft, but not just the big players, but also the smaller companies here. And there's a bunch. So this is really like a huge universe of companies who release their earnings. And the thing is, not every earnings report is the same. So what do I mean by that? Well, some companies release earnings, and you might say, well, this is quite impressive. Numbers seem very, very good, but you see that the stock is not reacting to that. It's not really moving. Yesterday, for example, very interesting, when we look at the price action in eBay, so numbers were really good, really crushing numbers. If you look at the broader market, SPY, for example, so S&P 500, SPY is the spider, it's the ETF on the S&P 500, pushed to new all-time highs, and or was close to pushing to new all-time highs. So very strong, in fact, presenting itself. And eBay didn't take off from there. So that was very, very interesting. it somehow could have been foreseen that probably there was not so much action to be expected, given the so-called pre-market we can have a look at. So websites like Market Watch, for example, they present data on pre-market. So right now there's trading taking place. So Wall Street opens at 3:30 German time. It's 2:30 London. It's 9:30 Eastern time, so New York time, and so trading already starts, the pre-market already starts, especially with institutions coming in at around 8 a.m. And what you can see during these earnings releases, if you get the data here, what you can find out is that the higher the pre-market volume is, especially when it comes in comparison to the average daily traded volume, so average daily traded volume in shares, then you can see that the stock is obviously hot, which is especially true once an earnings report was released. So this is already a first indication, a first idea of where to get this information from. So right now, for example, coming back to the numbers from Unity or also from TDC, for example, this volume is already above 10% of what's average daily traded usually in these stocks on a daily basis, in fact. So this is what we already saw in terms of pre-market volume right now. And so obviously bigger institutional players, bigger traders obviously try to already capture moves pre-market now after their earnings releases, and some on the long side as in TDC, or some on the short side as in and Unity in U. So and now let's come back here to the question: what is earnings season? So in general, each earnings season begins 1 or 2 weeks after the last month of each quarter. So December, March, June, and September. These are the quarters once they end. So December ended around 1.5 months ago, and now from midst of January, we get to see these earnings releases being published. Most of the time after markets have closed, but also some are releasing their numbers right before the open of the upcoming trading data. But usually you get the numbers before the spot market opens at 9:30. So Wall Street opens in this case. And certainly, that's also self-explaining that earnings season is an important time for investors and others who rely on analysts' review of a company's earnings and assessment of the intrinsic value of its stock. So usually you want to see the numbers. Are they in line of what was published earlier? And did they reach their targets, if you want, or did they beat their expectations, or the expectations from analysts in this case? And are they in the current environment a buy, or are they a sell? So did they disappoint, or was much of the positive release in this case already priced in? Market participants already anticipated such a release, and in this context. But all in all, it gives an insight into the company and into their current business, and whether it works or not. Then there's certainly some ways to analyze it. For example, just imagine you get a strong number in terms of earnings and in this case revenue, and you just find out that the company did not make the money in their core business, but they somehow sold something which is non-core business related, let's call it. So this is probably something which is then putting some kind of probably ceiling. It depends on the overall context. So for example, I mean, makes somehow sense if the company is giving away their earnings and release earnings, and then they have sold a non-core asset, whatever, and make money out of this, and then usually say, okay, but overall, probably if margins are declining within their business, or they're losing influence within their core business, it's probably something which is negative. So numbers could be good at first glance, but at second glance, you could find out that numbers are not as good as they seemed at first glance. The thing is, that's not necessarily true. Look at the numbers, for example, when it comes to Tesla. So Tesla was now included in the S&P 500, but the money they're making, if I'm not mistaken, last numbers which they released, especially over the course of the year 2020, they mainly made money out of selling. How did I call that? In Germany, we call this Umweltzertifikat. It's like a certificate. So since they're an electric vehicle car builder in this case, so they are building cars, and thus they get subsidiaries. I think this is the right word for this. In this context, then they are making money not in selling cars, but more like selling certificates to other car companies, like Volkswagen here in Germany, for example, making money that way, which helps them to be profitable at first glance, but at second glance, the core business is not really creating any money. Look at the chart from Tesla. Obviously, market participants do not care. They're just buying the stock higher and higher and higher. And even after the split of 5-1, I think it was in August or something, if I'm not mistaken, and the stock price being at 2,500 USD, then the split, you had 500 USD per share, while you had 5 times as many shares in your account. So nothing changed there. And now the stock is again on its way up to 1,000 USD. So we haven't yet cleared 900, but we're on a very close. We are close to cross this psychological threshold. Let's call it again. So nevertheless, it depends on how you interpret this. So it's not really different in this case. It's not really different from what we usually do when it comes to fundamental data, which is published, like non-farm payrolls, which were published today, for example. You interpret them in a certain way, and then you take trades based on these numbers if this is part of your overall trading and based on your setups. So okay. Oh, this is unfortunate. Okay, now it doesn't matter. Okay, so how to trade earnings season. So now I want to guide you here through my checklist. In fact, so what I just found out is here that usually want to have each bullet point being presented after I give a click. But okay, fair enough. So this is my checklist. In fact, so when I look at earnings, you have the number, and I don't overcomplicate things here. Certainly, I put it in context. But nevertheless, to really find out whether this earnings report, and especially the company which just released earnings here, is of interest for me, I go through a checklist as I did today, and then I find out, where I point out whether the stock is of interest or not. So first of all, what I certainly want to see is there a surprise in the earnings? So which means, is it better or worse than expected? So we will, as I already said, we will see whether or we will have a real trading example with Netflix on the next slides. But let's just go through, for example, Amazon and the numbers they published. So they published numbers saying revenue came in, or was, for Q4 20, it was 125.56 billion US dollar. That was way above what was expected. Expected was 119.7. So you see already a revenue beat in this case. Then the operating income came in at 6.9 billion. Expected, or the estimate, was 4.47 billion. So also a beat here. You have the Q1 net sales to be expected. Q1 in this case, 21 in this case. Net sales at 110 against the 100 No, it was 106 to 110 around, against an estimate expectation of analysts of 95. Also, we have a net sales expectation which exceeds what analysts have expected for Amazon here. You have an EPS, this is the earnings per share in this case, of $14.09 against 7.34. So nearly twice as high, so nearly 100% beat when it comes to earnings per share in this case. And so all this in combination, it's a strong beat. So putting this here into this context, this is definitely something we want to have a deeper look at here in this case. And then we say, okay, this is definitely a surprise on the upside. So usually it's a bullish sign. And then what we want to see, and this is the thing, I'm quite sure that this hasn't happened. So Amazon, due to the fact that the company is trading over 3,000 USD per share in this context, it's not on my agenda, but I'm also quite sure that the stock did not significantly gap higher here. Usually what you want to see, what you usually expect, let's call it in a lighter share, based on market cap, you usually see a gap which is greater than, or which is a greater plus minus 3%. So if earnings disappoint, usually you expect the stock to open significantly lower compared to the closing price of the day before. Then what I want to see, I also want to have a so-called ATR, so the average true range of nearly minimum $1, which means I want the stock to move at least $1 per day on average for the last 22 trading days. So this is another check. So which means if I have a penny stock, for example, which is publishing earnings, and in this context, the ATR is only, let's say, 20 cents or something. I mean, they can publish whatever great earnings they want. The stock is just not of interest for me due to the stock not having an ATR, which is of interest in this context. So it's lower than 1%, $1. And the next thing is, this is very interesting or important, especially when you're trading a bigger account in this case. So average daily trading volume, you want to have a minimum of 1 million shares traded per day. And this is very simple to understand. You need liquidity. You need an environment in which you can calculate your risk, especially. So once you have a too low trading volume here per day, the thing is that the stock tends to create some erratic moves on the upside, on the downside. This is one thing. In addition to that, it's also that the stock can easily be manipulated. And you also will see that the spread is usually wider than what you need here to really calculate your risk. So there will be some erratic moves. There's the risk of facing slippage within your trading. So all in combination is something where you say, I want to have a stock which has an average daily trading volume of minimum 1 million shares, and then see from there whether I can position myself within the trade, but avoid a too low average daily trading volume. Yes. Yeah. So this is an interesting question from David in this case. Can you explain the ATR reasoning? So it's my checklist. So this is a very simple way to explain this. So it's my checklist. I get your point. So David writes, if a penny stock says is 10 cents, for example, and moves 20 cents, that's a 200% move. If Tesla of 500 USD moves $1, that's a 0.2% movement. So there's first of all, I don't feel comfortable trading penny stocks. This is not necessarily mainly due to the ATR, but it's just my style. It's just I just like to see moves with a minimum dollar range per day, let's say. So this is just a personal preference. But also in addition to that, it's also the question whether here we have a liquid enough stock. So in this case, certainly you have a move of 200% within a day, but if it's not really a game changer, it's more a sign of less liquidity being available within the stock, which means then in this case that even if you have a move which is of interest for you at first glance, at second glance, it's probably not, due to the problem that you can't really calculate your risk. So which means that in a penny stock, you have outstanding moves on the up or on the downside in this case. But the thing is that you do not have enough liquidity within the stock to calculate your risk accordingly, which makes it very, very, very difficult, and only for very experienced traders, and even for these, not necessarily possible to trade them. So I hope that this is explaining the reasoning behind my thoughts here. So the combination of all these points within this checklist, they yes, yeah, perfect. Liquidity issues, exactly. So this is due to my personal preferences in this case. And then again, pre-market volume. So we have to hurry up a little bit. We have to hurry up because this is probably within the next minutes. It's probably not available anymore. Let me just check here. 1 sec. Let me just open to get an overview of what I'm talking about here. 1 sec. Hopefully the window opens now. Yeah, there we have it. So this is now the example, Teradata in this case. So TDC, I mentioned at the beginning. And there you can see it. So there's pre-market taking place right now. And what you can here see is that you get an idea on the before hours volume in this case. So right now it's 290,000 shares which were traded. And let me just give you another idea here. So you can see that this is data I'm getting together from external websites in this context. So this is very important to get these sources before you start trading. Then at a broker like Admiral Markets in this case. So you choose Admiral Markets for reasons I already explained in the beginning. For your trading, still you need to get the information around the stock you plan to trade via Admiral then here from other external websites. So first of all, I will share these links, by the way. So it's Market Watch in this case, and I would say you check Market Watch if you plan to trade earnings in this case and get some ideas on the pre-market volume. I check between 1 p.m. to 2:15, 2:20 p.m. London each day. And then to compare this, so you have here the before hours volume, it's 325K. And then what you do is you go on Finwiz. It's a free source in this case. You can here type in the ticker symbol, and what you get here is the average daily traded volume. So average volume in this case is 1.27 million shares. So what does it mean? Well, you compare the pre-market volume, in this case 330, and divide it by 1.270 million, 330K. To 1.27 million, and you will see obviously that we're having a pre-market volume which is way above 10%. And this is how you can understand here. Where do we have it? I'm sorry, where's the presentation? There we have it. So this is what you what I mean when I say minimum 10% of the average daily trading volume in the pre-market, so that you have already an elevated volume which points to the stock in this case really being of interest for also institutional players, especially for institutional players, since these start to positioning already in the pre-market and in this context. And this is my checklist I go through. And so what I then do right here is I want to guide you through a real trading example on how to trade, in this case, a big company like Netflix in such an environment after they released earnings. So these are the numbers, and which at first glance, it seems not so outstandingly good, to be honest. So we have an EPS here, which was released. By the way, when did they release earnings? Let me just check here. Do I have it open? No, it's not open anymore. So it was somewhere in January. I'm not really sure. I think it was somewhere around 2 weeks ago or something. But doesn't really matter today. So what they did, they released earnings. They released earnings per shares of 1.19 against an estimate of 138. So this is not really cool. This is not really good. It's below estimation or expectation of analysts, so usually a reason to be skeptical in terms of the bullish potential, probably expecting a move lower here. We have a revenue which comes in line, slightly above expectation, 6.64 billion against 6.63. Again, in line nearly, so nothing really outstanding. Q1 revenue in this case, so the guidance for Q1 at 7.13 against an estimate of 7 billion. That's also something which is in line. But now I outlined what's important, and so this is something which you have to understand, and where you have to have a certain level of knowledge in this context. So what you need to see here is what numbers are of interest when it comes to an earnings release from a company like Netflix in this case, and it's not really about the earnings per share or the revenue. Still, it's not the worst thing to see numbers improve / beat expectations from market analysts, but it's more like you have to really know what market participants or what the street in this case is looking at, what traders are looking at, and this is the streaming paid net change. These are the people who are watching Netflix and who pay for their business, for their core business, and this is something which came in significantly above expectation. And this is also probably even more interesting and even more outstanding compared to or looking at the whole overall industry and the developments there and all the competition which Netflix is facing here. So Disney Plus, for example, or Hulu or whoever. So, and numbers here came in at 8.51 million against an estimate of 6.06 million. So beating this expectation of nearly 30% here, slightly more. And also here, something which is interesting, this is something again. So probably that was one of the reasons why the follow through on the upside wasn't seen then. So because Netflix just pushed to new all-time highs, yes, but then dropped in the aftermath of this development, respectively, in the following days. So Q1 streaming paid net change is seen at 6 million against an estimate of 7.45 million. Okay, so numbers all in all mixed, let's call it. But what's of high interest, and this is what market participants, especially when we're so close to push to new all-time highs, will certainly look at here, is the streaming paid net change. And then we have the gap greater 3%. In fact, and this is something you can see here, so that market participants are obviously, and especially institutional players, are looking here at this aspect of the earnings release. You can see that the gap greater 3%, in this case 13.45%, was already indicating that market participants paid heavily above the closing price of the day before. We have a Netflix, certainly a stock which is trading above $500, so ATR greater $1 is of no big problem. Also, the average daily trading volume is more than 4 million shares. So 4.79 million, also greater than 1 million, also check in my favor. Then I have the pre-market volume, which was also showing that there was market participants being interested, institutional players coming in already before Wall Street opened at 9:30 a.m. Eastern time in this case, so 2:30 London. And what you can see here in this context is that all checks are in my favor. And given that, what I did is I formulated a game plan. I wanted to formulate a clear plan on how to tackle Netflix in this environment, how to trade it. And what I do therefore is I look at the chart, short-term chart in this case, certainly also at the daily chart, so to see that this is all-time high territory we are trading in, but also then on the hourly chart, 30-minute chart, and then going down from there to the 5-minute to 1-minute chart, in which I let my trading taking place. And what I get there, what it's of interest here in this context, is certainly the relevant technical levels I want to look at. So I have S1, S2, and S3 here in this context. So this is something you can draw out of pivot points, for example, where S1, S2, S3 is also something. It's support, respectively, R1, R2, and R3 is resistance on the upside. And this is what I want to see. So against which level I want to see the stock trade against, or against which level I'm getting interest in this context, where I see the stock supported, respectively, where I see resistance on the upside. And S1, 565, S2, 560, and 545 if there's just a short pop into the open, and then we go lower from there. And on the upside, we have 575. This is the all-time high. And then we have none, since it's all-time high territory in this case. And my game plan here, what I usually do, I have 3 scenarios I wrote down every day. So what I here do is I only have the scenario which played out in the which I present to you right now. So there's also a scenario, for example, where I see then a drop below 560, holding below 560, and then the push lower to 545, for example, in this context, or where I, what was the other scenario? I'm not really sure, but doesn't really matter. So just to let you know, what I would suggest is write down 3 scenarios we want to see, and this gives you already a very comfortable, let's call it, or you find yourself in a very comfortable spot in this context, because you already visualize to some extent what scenarios you want to see play out to attack the stock then, given the earnings release, and what is your hypothesis in this context? So what do you want to see in this context then, given these earnings? So in our case, and given the overall technical picture, we have a Netflix that that day to that point. We say, okay, we're close to new all-time highs, trading shortly below these. So there's some squeeze potential, and the numbers which were released really justify such a long BS in this case, for example. And so what I do then is that I say, okay, if it holds above 570 and VWAP in this case, so VWAP is a volume-weighted average price I get from an external source in this case also, and I say, okay, I want to then trade against VWAP long in this case, so with a target to trade a squeeze above 575 and a stop which is based on ATR, which we saw at $15 around. So if I have a 20% ATR in this case, so this is around a stop of 3 USD. And what's now interesting probably is, and let me just see. Oh, I'm sorry, that was the wrong one. So what's probably of interest. Yeah, this is the trade. Okay, let me just go back here before we go through the trade. So the thing is, Netflix is a quite heavy stock. So we are trading here a stock which is trading around 570 USD. So let's call this a comfort zone. So I prefer to have some kind of ATR of greater $1 US, but also I don't want to have a too elevated ATR because the swings within the stock are sometimes, it's not too much because I can reduce the position size, certainly, but there's some kind of comfort zone I feel comfortable in. And so here in this context, it's very important to note that this scenario is written down quite easily, but I also know that I have a clear picture in mind I want to see to make this tradable for me and trade out of my personal comfort zone in this context. So which means what I want to see is I want to see the stock trading above 570, closely to the all-time highs around 575. And also above this volume-weighted average price, but I want to have a tight consolidation above that, and the consolidation in this context is then for me the how can I call this, the ticket, the entry ticket, if you want, into the trade, which is perfectly lining up in this context with my overall setup, also based on the fundamentals in this case, so based on the ATR, for example. So in fact, you will see that my stop of 20% of the ATR of $3 is a little more. I'm formulating here. In case of the trade, it was slightly below that. It was around 250, and that was given due to the price action, which we will go through now. So we have the entry long in this case. So what did we see in this context? So we saw stabilization above 570 in this context. And what I did was I said, okay, now we see the stock trading consolidating. There was a tight consolidation above 570, around, in fact, between 572 and 571, but above 570. And then I said, okay, now what I want to do is I want to place a buy limit, an entry limit, 570. 71.60, I think was. So I got also positive slippage in this context. And then you can see here the stop at 569.50. So given the price action, you will see the price action in a few seconds. So I have also prepared a chart for this. So you can see here that the stop is around, in fact, it's only $2. So it's not even a $3 or $2.50 in this context. It's $2, and it's given the fact that here the tight consolidation took place shortly above VWAP, and the VWAP is a volume-weighted average price. I don't want a stock to drop below again, so yeah, that's before we go into too much detail around the VWAP. Probably we should do a separate webinar on this, and to explain why this is of importance and why this is a very interesting, very interesting volume weighted average price, especially the average price. So like a simple moving average or exponential moving average, for example. So a moving average in this case, why it's of interest is because it's underlined with volume. And you really know that market participants are obviously looking at a certain level where the volume average weighted price you can find at then, because there is a high volume, which is a turnover. And market participants obviously spend a lot looking at this price in this case. And so I also formulate a plan on how to take profit on the trade. And this is something I do based on several reasons. So in this context, it's 50% at around 582. That was half an ATR above the all-time high. And then there was one ATR above the all-time high, which was at 590 in this context. The average of this trade then in this case was 586. So if you take 50% from this and 50% here, you get 586, and you get a very attractive R multiple in this case. So what I do here is I calculate the gain I make on the trade, and I compare this, I put this in relation to the risk I'm willing to take the trade. And the R multiple in this case is quite impressive. So 7.47. And there you have the trade. So it's, yeah, this is not really sure if you can really see and spot what I'm talking about. But so that was the price action right at the beginning. Let me just see. No, I'm sorry. So probably I thought I have some arrows here to point this out, but then I'll use my here the mouse in this case. So what you can see, there was this pop into the open. Okay, so that was already up to the all-time high. I'm not really sure, but I think that didn't really push us to new all-time highs. It was shortly below that, and then we saw a pop here, or not a pop, but it was more like a flush towards, in fact, the level I pointed out as a potential support on the downside. It was really close. It was around 560. You remember that was S2 in this case, and then we held above 560. And then traded higher and back above 570. And this is what I'm referring to here as the tight consolidation. So this is something you can really see. We have a high beta stock in this case, okay? So it's a stock of 500 USD in this case. And seeing such a tight consolidation is usually a sign that there's some accumulation being done, let's call it, or that there's some pressure building. At least the way I interpret this, what we get to see here. So what you have here is this quite tight consolidation above that key level, which I see at 570 in this case. And then what I do is I use a technique around the VWAP and a pullback into VWAP then, or at least a short spike into VWAP in this case as my entry. You can see here, and what's of really high interest, and that's something I'm to some extent really proud of, is that I interpreted the price action and the earnings release really well. I really formulated a great game plan for the trade. And what's even better is that I was only behind the spread in this trade. So I spiked into this level at 571.60. So 556 I was filled. And then the market took off from here. So it took a little, but then you can see, and with new daily highs, once we pushed higher here, I had my first trade being taken out here, half an ATR, which is even more interesting. And this is probably something of value then to see in this context, whether there's some kind of pattern to it, let's call it, because what you can see is that my entry, or in this case, sorry, not entry, but my exit, 575, the recent all-time high, then we make a new all-time high, and then we take 50% of an ATR move here. We get at around 582. And what you can see is that here we stalled a little. So I took out 50% of the position there, and we had some trouble to trade higher. The great thing about this was that I was already profitable and in the money for the trade, since I could also trail my stop here to break even and just wait and see. And if we continue to stabilize above all-time highs and above VWAP, well, I'm completely fine to let the trade run. And this is something you got to see here then. Which was even more interesting was that we got to see this push to 582 and the push to new all-time highs in a quite thin market environment, or in a market environment which is usually, by the way, I just remember what day that was. That was the 21st, right? No, the 20th. Was the 20th? It was the day of the Biden inauguration. That was something I remember right now. Yeah. So some people are just probably not paying attention to what happened in the market, probably having a look here at this Biden inauguration, probably having lunch, whatever, and then just seeing that they probably missed the trade in this context would let me come to the idea that probably now there's some chasing of the push to new all-time highs. We have to remember, we had not just the earnings release in this context, but also this is a Fangman member, let's call it. So this is a stock which is of interest for all market participants around the world, and everyone is watching this stock, especially in the US markets in this context. So I think it's a fair idea, or yeah, I think it's a fair statement in this case to expect market participants probably chasing then after the push to new all-time highs, and probably not having had an entry or something like that, but just thinking, okay, now I have to buy the stock with the push to new all-time highs. And that was something I kept in mind, and why I was quite fine, not just since I was already in the money with taking 50% off the trade here, but also keeping the rest of the position here and expecting really, or seeing a quite solid chance that we'll probably push up to 592. So the second, or 590 in this case. In fact, so my exit was at 590. There was also, again, positive slippage of 49 cents in this case. And yeah, as you can see, we really topped out against this level. So we didn't really make it above 600. I really had 600 on my radar here for the rest of the trading week. And I really could imagine Netflix to push above that level. Didn't happen. But however, I think the trade, yeah, played out really well, and it's something to really get an idea on how to play earnings. So you have the earnings release. It's a release which is above expectation, especially in the core business in this context. And then you formulate a game plan. You have clear levers to trade against, and then take it from there with some techniques, certainly, which are a little more sophisticated. But all in all, you can see it's possible to use earnings release to formulate a trading plan for the day and to trade, like in this case, a Fangman stock then. So let's sum this up. Earnings season is the period of time during which a large number of publicly traded companies release their quarterly earnings reports. And in general, earnings season begins 1 or 2 weeks of the last month of each quarter. In this case, each quarter, December, March, June, and September. So this is 4 times, let's call it a year in this context. And my checklist for earnings plays then is, I want to see an earnings surprise, better, worse than expected numbers being released. Then I want to see a gap which is greater 3%, probably 5% sometimes. I want to see an ADR of min $1. So this is not a given. It depends on your trading style and whether you're fine with that or not. But given my personality, I prefer to have a stock which has an ATR of greater $1. I want to see an average daily trading volume of more than 1 million shares. In this context, this is also not a given. Some might say I want to see a lower number. Some might say I want to see a higher number due to liquidity issues. And the higher the number, most likely you will see also a tighter spread, and thus an increase in terms of trading trading costs doing business in this case. And then you want to see a pre-market volume, which points to the fact that the stock is really hot and is considered to be interesting when it comes to institutional traders. So in this context, I want to see from the average daily trading volume 10% and more being done and being traded already in the pre-market between 2 in just the German time, so 8 to 9:15, 9:20 a.m. Eastern time, respectively, 1 to 2:15, 2:20 London time in this case. And this is when I'm getting interested and when things are really start to get my attention, and when I will focus on trading the stock then. And that's it around how to trade earnings season in this context. I hope you got something out of this and can use this now to formulate your own plan when it comes to trade earnings, to trade stocks, to tackle stocks which just released earnings. The next topic won't be around stocks, but will be around Forex and central banks. Will be on next Wednesday. And as you've probably seen, I switch here with Paul, and next Wednesday it's my part then to talk on this hot topic then, Forex and central bank stimulus. And what we want to do is we want to have a look at QE in this context, which the effect it has on yields. And we also want to answer a very interesting question in the current environment. Probably have seen Euro USD just dropped back below 120. What happened there? Has it probably to do with the fact that the ECB is even more aggressive when it comes to quantitative easing in this case? And we want to compare the Fed towards the ECB. We want to formulate an idea on what to expect for especially a currency pair like Euro USD in this context. And also, if the let's call it the real FX trade, is probably being done in gold. Now some might say, well, what has gold to do with FX? So some might say that gold is true and real money in this case. So, and in this context, there's some also, it's not a big surprise to see some traders refer to gold trades as also FX trades in this context. But this is something we want to shine light on next Wednesday. So next Wednesday, 2 p.m. London, 10th of February. Please join me there. I really look forward to it. You can check your inbox for the webinar link if you're already registered. Again, this is another webinar, so very, very important. So if you now join this webinar here and you watch this Trading Spotlight webinar series, it's not the same format. So you have to register on the website if you haven't yet registered to be registered for this event then too, okay? So very important. If you watch this on YouTube, you go over to admiralmarkets.com, educations tab, their webinars, and there you have then a link, which is not Trading Spotlight, by the way, so the link is not the right one, but on the webinars, and there you have this hot topic box then, in this case on central bank and Forex trading in this context. The same is also true for those of you who are now right here in the Zoom webinar, in the live event, asking the questions. And here's again the contact details. So if you have any questions around Admiral Markets, especially, feel free to check out their website, go over, send an email, ask your questions, check out the YouTube channel, subscribe to the YouTube channel if you're watching this now on the YouTube channel. Go over to the Facebook page. Also, I think you can not subscribe, but give a thumb up. And this is the risk disclaimer. So that's it from my end. I really look forward to hear from you, and all the best. Have a nice weekend. Stay safe. Stay healthy. Happy trading. Watch your stops. See you.